Hello there, and welcome to the T-Junction. I'm Jats, and today we're going to be talking about financing new cars. In this episode, we will discuss the use of cash, hire purchase and the cost of borrowing, personal contract purchase or PCP, leasing, personal contract hire and subscription models, and salary sacrifice. And now for a really speedy disclaimer. Either the T-Junction or its representatives are registered with the Financial Conduct Authority, the FCA, and as such, any information contained in these episodes does not constitute to being financial advice. It is informational and education. It is recommended that you only take financial advice from a qualified person or company. Now, over the last 40 years, I've bought and sold about 30 cars. As a private individual, I'm not a trader or anything like that. But using some of the experiences I've gained over that time and sharing some of that information with other people, there's been some positive outcomes. And alongside me, I've got Dhroov.
Hello, so I'm Dhroov. I have very little car buying experience, so I'm really excited to see what we're going to be learning about this and what we can take from this, basically.
Brilliant. So thanks, Dhroov. So Dhroov, just tell me a little bit about where you are with your current motor car that you have right now.
Yeah, amazing. So I currently have a Honda Civic Type R. It's on a 4-year PCP, which I'm sure we're going to explain what that means in a second. I'm coming towards the end of my 4 years. So I'm in a position where I'm really thinking about my options. Do I continue keeping the car for long term or do I go and find something else?
So just tell me a little bit about your PCP, your personal contract that you have right now then. So how much are you paying and how does it work?
So I bought the car in 2021, sort of January time. I put down a £4,500 deposit, paying about £419 a month over 4 years. So coming towards the end of the 4 years in January. Yeah.
Okay. So what we'll do is we will have a little look at your actual PCP agreement because I think it's quite interesting what it shows on there for a car, which is effectively quite a high performance car, top of the range flagship model. So that would be quite an interesting one. So in terms of financing then, you're using that PCP model at the moment.
Yeah.
You said you were going to get towards the end of your PCP in about 8 months. So you're in that position right now where you can start to think about what you're going to do next.
Absolutely.
Okay, lovely. Right. So do you know what your car is actually currently worth right now?
Good question. So from what I've done my own quick research, we're looking somewhere between about 26,000 and 30,000, somewhere in that rough ballpark.
And do you know how much you still owe on your PCP agreement or how much you will owe on your PCP agreement?
I can't remember exactly, but we're looking about £15,000 there or thereabouts.
Okay. So there's some equity in your car?
There should be some equity in my car, a good amount of equity as well.
Okay.
Yeah.
All right, lovely. So that means then you are going to have a lump sum that you can then put into a car. So let's just quickly talk about buying cars with cash and using cash. So cars, generally speaking, are a depreciating asset. I don't know if you've come across that term before.
Absolutely. I've heard it before. I mean, someone who's interested in finances as well, you wouldn't put your money into something that's going to lose money tomorrow, would you?
Exactly.
Absolutely.
And that's exactly what cars do. Yeah. So you don't realize how much of a drain they can become.
Yeah.
But essentially, you have a car. You put for every pound that you put into that car, when it comes time to try and get that pound back again, you'd be surprised because you will get back considerably less. And that is what a depreciating asset is. For the longer you own it, the worse it can become. Yeah. With cars, it can become very bad very quickly as well. Yeah. So that is always something that you've got to be aware of. So generally speaking, then buying cars with cash, if you have an amount of money, let's say you've got a windfall that you've had from a pension pot, or a lump sum or something like that, or you've inherited some money, or you've saved. Is it sensible putting a big amount of money into a car? Now, I don't know what your thoughts are with what you're going to do with your positive equity that you have. What were your plans?
I mean, initially, I was just thinking to keep the car because I love it. But there are some interesting options out there. So who knows? I'm tempted. I'm tempted to put that down as a deposit towards another car. I could use that cash and just buy a car outright altogether and nothing more than that. I'm not quite sure 100% what I want to do yet with it, but it'd be interesting to see a bit more about what other finance options and ways to finance a car would be from this conversation more than anything else.
So one of the things that I've learned over very many years is when you come to putting cash into a car, ideally, if you're going to buy a car with the £10,000, that's something that you could do, knowing full well that you're not going to get a brand new car for £10,000, and you're going to get something where the depreciation has already occurred. If you're going to take that £10,000 and put that in as a deposit towards a brand new car, you can basically kiss goodbye to that £10,000. You will never see that again.
Yeah.
Chances are.
Yeah.
Okay. So my advice generally is, if you're buying cars with cash, if you're buying an older car, a second car, third car, by all means, cash is probably the best way to do it. There's no contract. You don't have to worry about credit checks. There's none of those things.
Yeah.
And you can buy the car and that's yours. If you're going to go down the route of putting in a lump sum amount of money, then buyer beware. That's really all I can say to that. I mean, if you're going to buy a car with cash, it might be because you can't get credit.
Yeah.
In which case, you might go to a broker or something like that if you need to borrow the money. And we'll talk about borrowing money in HP and all the interest and all the things that you pay. But essentially, be careful what you do with the money. And when you do spend that money, you've got to imagine that you're not going to get much of it back.
Yeah.
So I think you have to be very clear about that. If you're going to buy a car for £1,500, £2,000, something like that, it's fine. It's not a problem. If you're going to buy a £40,000 car and put £10,000 as a deposit down, bit of a mistake.
Yeah.
I've done it.
Yeah.
And I've learned from it.
Yeah.
And I would strongly recommend that nobody does that.
Well, cash flow is king, right? Why would you put all of your money into something, right, when it could be sitting somewhere else making you money effectively, right? So,
and that's a really good point.
Yeah.
You could get the money earning for you if you have it. So
Absolutely.
So why not?
Why put 10K into a deposit when you could, using that other £10,000 to something else, use a smaller deposit?
So you've got an amount of money. You're going to put a small deposit down. Let's say I would always say to anybody is put the smallest deposit you can put down on a car. So you put the deposit down, and then the rest of the finance. What do you do? Now, the traditional methods of hire purchase, less and less people are doing that now. More and more people are going down the personal contract purchase route, PCP route, as you've done. And that's a really good way of financing cars. But you've got to remember that whenever you get into any of these agreements, generally speaking, unless it's hire purchase, you will be paying the depreciation on that car. You're making it nice and easy for the next buyer to buy a car at a knockdown price.
Yeah.
So, in 3 years, a £40,000 car might become a £15,000 car, as you found.
Yeah.
So, or 4 years. So you've got to be ready and willing to accept that.
So why would you buy a car then?
It's a very good question, isn't it? And as a petrol head, having done it many, many times, I can tell you it's purely for the personal joy and the satisfaction of being able to maybe buy a new car.
Which is why I do it again, which is why I would want to spend my money buying a car again. It might be a waste from someone who's more financially minded, but if you've got an interest in cars, you've got an interest in something. Yeah.
So let's just have a little chat then about things like hire purchase. And I mentioned hire purchase a minute ago. So hire purchase is where you secure an amount of money from a lending house. It could be a bank or it could be the dealer themselves. Generally speaking, it'll be an amount of money that is specifically for that car, and therefore it's called hire purchase. There's an amount of interest you pay, and that interest is usually counted or calculated on an annual basis. Okay. So you'll see a flat interest rate or a fixed interest rate, and you'll see APR. An APR.
So you get two interest rates effectively.
That's what they show
on paperwork, right?
On paperwork.
Okay. Right.
And they say that the APR rate is the one that tells you the more overall cost for getting into a finance agreement.
Right.
APRs, generally speaking, are the fixed annual percentage rate plus any costs and things that are actually added to that finance agreement. So things like fees for buying at the end, documentation fees, all that kind of
admin stuff.
And sometimes these fees can be quite high.
Right.
So again, you need to be very careful about, what they actually mean.
Got you.
Ideally, the closest you want to be is the APR and the annual percentage rate, which is the annual percentage rate, and the actual fixed percentage rate to be as close together as possible. Yeah. Then that you're paying very little fees and costs and things associated with that finance. So generally speaking, then, when you start making these payments, they take the amount of money you're borrowing, they add the interest onto it, they spread that across 36, 48, 24, however many months your agreement is going to last for. And then exactly how much money you're going to be paying.
Yeah.
And at the end of that agreement, the car is yours.
Yes.
Those funds are tied to that vehicle.
So HP is effectively like when you get finance out on a sofa, or if you get finance out when you're paying for your Invisalign, or when you pay for whatever it is, your watch or whatever.
Yeah.
You will own it at the end of the term.
Generally speaking, it depends on the agreement.
Okay.
Sometimes they say that when you've paid more than half, you then become the owner of that particular item.
Yeah.
It depends on the agreement, and you do need to read the small print.
Fine.
Now, of course, I'm not FCA registered, with the Financial Conduct Authority, but if you are going to borrow any kind of money from anybody, my recommendation is a very strong recommendation actually, is to always ask the lender what their FCA registration number is. You go onto the FCA's website, you can enter the registration number, and you can validate it there.
Yeah.
And that way you know that when you are borrowing the money, you're borrowing it from a tried and trusted source, somebody who's going to follow the ethics that the FCA instills. So that's a very important message, I think.
So that'll be like, for example, if you're going via a broker or a random company that you never heard of before.
Yes.
Would you, from a dealership, it's going to be more
they're likely to be. But again,
just to double check,
you
right?
are well within your
Nothing to
rights.
okay.
You are well within your rights to ask for their FCA registration
Sure,
number,
sure.
which they should be able to provide, and you can then
Okay.
validate it.
Yeah.
So that's something that you should do. It should be on the documentation.
Yeah.
So that's hire purchase. Now, when you're paying that hire purchase back, okay, just to finish that off, when you're paying hire purchase back, you're paying that monthly installment, and the interest that's calculated is usually calculated what they call on a daily rate or a fixed rate basis. Okay,
Right.
daily rate basis.
Okay.
What that means is when you make one payment, your payment stays the same. You move on to the next payment. So you might be paying £400, let's say, a month. But the amount of interest that you're paying has reduced slightly. But the amount of capital that you're paying has grown slightly. So every month, what you find, and we'll have a look at this demonstration in a moment, but what you find is that the amount of interest you're paying is gradually reducing.
Right.
The amount of capital you're paying off is gradually going up, but your payments are always the same.
So if you had like a bar chart, it would...
Yeah, you'd see it, one growing, one reducing. Just slightly.
But the total is the same.
The total
it's
is
just
the same.
how it's split up in the middle is different.
Exactly.
Right? Oh, interesting.
Exactly. Gone are the days when they used to do the old compound interest and charge you all the interest up front. So, the first few payments, you were literally just paying the
just
finance
interest.
costs off.
Oh, I see.
They've moved away from that now.
Got
and fortunately, that doesn't happen anymore. But this is why you need to go through an FCA registered company just to make sure that you're not
paying over the odds over crazy
unknown waters.
Yeah.
Okay, so that's hire purchase. The other option then is PCP, like you've done.
Which is what I've done, right? Yeah. Okay.
So with the PCP, again, you pay a deposit. You agree a price of car, you pay the deposit. They might make a contribution as well. And dealers, generally speaking, when they sell finance, they do get some kind of incentive from the finance company. Now, it could be at group level, it could be at dealership level, it could be to the actual salesmen themselves. We don't really ever know what that is.
Right. Okay. So it would be in a dealership's interest to offer you finance and sell something via finance.
Absolutely.
It could be. Yeah, right.
Absolutely. And they will always try and plug their products, as they call them. Okay. But these products, generally speaking, will be there to help make it easier for you to buy the car that you want and hopefully spend a little bit more than you were originally planning. They're in business at the end of the day, and you can't blame them. So that does happen. Now, with PCPs, you find the car, you pay the deposit. And once you've paid that deposit, you then have monthly payments to make. Those monthly payments work in a very similar sort of way to hire purchase. You are paying off the depreciation in the car, generally speaking, for the first, 3-4 years of the life of the car anyway, when you're in one of these financial agreements. But again, you are going to be paying off an amount of money that doesn't include what they call the guaranteed future value. So in your agreement, you said you had £15,000.
15, 16,000, something like that. Yeah. So I'm only paying from the list price up until that point, right?
Until that point.
I see.
That's all, from whatever the price that was agreed.
Yes.
Up until that £15,000 you are going to pay.
Yeah. Okay. So as a result, your payments should be lower.
Yes. And that's what makes it more affordable.
Yeah, I see. Yeah.
And that's why it's become so popular. It's allowed people that would only be able to get, I say only, which is wrong. It's a first world problem.
Sure.
But people who might be able to get into a Ford can now get into a Mercedes.
Yeah.
That's the difference that it's
affordability scale, right? Yeah.
Exactly. And it's great. It's a great way of actually getting into a new car. Now, PCPs give you that ability to be able to pull out of the agreement. So you can ask for a settlement figure. That settlement figure will be whatever you owe in terms of the capital with hardly any interest added on. So they've gone, they will remove the interest because you've already paid you've been paying the interest as you've been going along.
Yeah.
So there is an element of interest you've already paid. Now, that's quite an interesting thing because it allows you the ability to be able to just pay the PCP until the end and then pay your final balloon payment or guaranteed future value or whatever you want to call it. To keep the car.
Okay.
You can hand it back to the finance company. So if you do get into this position where all of a sudden car values really plummet and your car is worth less than the guaranteed future value,
you've got negative equity.
You have negative equity in the car.
Yeah.
You can just say, all right, something, I'm going to walk away from this now.
Yeah.
I've done my bit.
Yeah.
But you can only do that at the end of the agreement, at the end of your 4 years.
You can't do that in the middle.
No.
Right.
You can settle it earlier, but you can't just walk away from it. You've got to pay it. You have to pay whatever the balance is.
I see.
So that's the thing. So where would a situation like that be beneficial, where you could just walk away from a car? If you were buying something like a big SUV, might be quite good, because if all of a sudden the economy takes a bit of a turn or fuel prices go up and they become less desirable and prices really do plummet, might be it's an option that you.
If your Range Rover start getting stolen off your driveway, right? Yeah.
Not that ever happens,
No,
of course,
no.
So you do have the option of being able to do that. So that's PCPs, and that's where they differ with hire purchase.
Okay.
So hire purchase, you own the car at the end, right? And that's the way it works. With PCPs, there's flexibility.
Yeah.
You're only paying the depreciation, and there's a guaranteed future value,
Right.
final value at the end that you can pay. So that's that one. The other option, which people do now more and more and more, is if you're one of these people that changes your car regularly, and you by the sounds of it, you're already thinking about what to do next. You're not.
I get a bit bored.
Get a bit bored. So anyway, if you do get into that position where you think to yourself, well, maybe I'm going to change the car regularly. I might not keep this car forever. I'm young. I've got money coming in. Don't know what to do with it. All that kind of stuff. Still living at home.
Absolutely.
All that sort of stuff.
Yeah.
You could actually just decide that, well, what I'm going to do is I'm going to go down a leasing route. Now, you can get leasing through dealerships, or you can go to a leasing broker.
Okay.
And the way leasing works is slightly different. It's a little bit like PCP in that you have a limited amount of miles you can do per year and all the rest of it, and you're tied into a contract. But with leasing, number one, you're going through a broker, generally speaking, unless it's a dealership.
Okay.
You tend to go through brokers because they give you the best deals. They don't have swanky showrooms.
Okay.
They do it on they have contracts, if you like, or agreements with multiple different car suppliers.
Yeah.
And some of these leasing companies are actually quite big.
Okay.
What they will do is they will actually try and find you the car at the best price, so they can get really good discounts.
Yeah.
And the thing with leasing is that you are effectively hiring the car.
You're renting it.
You're never going to own it.
Right.
Some leasing agreements do have the option of allowing you to purchase the car at the end of the agreement.
Oh, okay.
Some allow you to extend the lease if you want to as well at a slightly reduced price.
Yeah.
Not a lot of them do, but some of them will allow you to do that. So leasing is an option if you are regularly changing your car.
If you regularly like changing your car.
Yeah. Okay. Sometimes leasing can also include things like maintenance as well for the car. Right? So that can be quite useful.
Cool.
Now, generally speaking, when you go to a dealer and say, I want to lease a car, they call it personal contract hire, or P.C.H.
Okay, so we've got hire purchase HP, we've got P.C.P, personal contract purchase, then we've got personal contract hire.
Yeah.
It's quite confusing, actually.
It is.
Yeah.
And when you see all these acronyms, people think, well, what are they?
Absolutely. Okay, so this is P.C.H now, personal contract hire. Okay,
personal
which is leasing.
Hire, which is leasing, effectively.
Yeah.
So you have, 6,000, 8,000. I always say to people, always go with the lowest mileage you can get away with on any of these agreements, because it does reduce the price down, because they know that the car's going to be worth a little bit more if it's traveled less miles.
Yeah.
In your case, you've only done, how many miles have you done in your car?
So over nearly 4 years now, coming up to 4 years, 13,500. It's still brand new.
Which is nothing, is it?
Still brand new. Yeah.
Right. So there you have it. So, if you had said to them, I only want an agreement with 5,000 miles per year, the leasing cost will come down.
Yeah.
Now, even with PCPs, I would say the same thing. Just go with the minimum amount, because at the end of that agreement, okay, if you've gone over, pay it at that point. It's only going to be 6, 7, 8 pence, whatever it is per mile.
Yeah.
Okay. If you are going to part, because with PCPs, you see, you can part exchange as well. And with leasing, you can't. But with PCPs, I've done it where I've thought to myself, actually fancy a change. And I've actually gone back whilst I'm in that PCP agreement and said, I want to part exchange the car. And they've said, yeah, no problem. We just settle it and whatever the balance is. So you can do that. And then the mileage is just out the window. It doesn't really apply anymore.
Got you.
So that's the option. Now, I've also, I don't know if you've ever come across subscription models.
Like Netflix.
A bit like Netflix for cars.
Okay, cool.
So,
no,
without the flicks.
Okay, fair enough. Not for cars, I haven't. No, okay. This interesting.
So subscription models work where, again, it's a bit like leasing.
Okay.
You hiring the car. Volvo do one. They advertise it now. They've started to advertise it now.
Okay.
I think Renault do one as well, where you effectively agree a price that you're going to pay every month for a car at a fixed mileage. But with 3 months or 6 months notice, you can change the vehicle within the contract period.
You can change your car
within 3 to
6 months?
Yeah. You can upgrade or downgrade.
Right.
Now, of course, for that, they're going to charge you.
Yeah.
So your costs will be higher, but it gives you a lot more flexibility.
Because I guess what you're doing, you're registering a car, you're bashing it for 3 to 6 months, not that you would. You'd bash it for 3 to 6 months, right? Get the most out of it. Someone's got to pay for the depreciation, right? I see.
What's the fastest car?
You know?
A hire car.
Yeah,
So
absolutely. Yeah.
So it's a little bit like that,
Yeah.
isn't it? So I suppose at the end of the day, you know, personal contract hire, leasing, or, you know, if you're going to get into a subscription model, there are restrictions around that
Right.
as well. The subscription model is the most flexible. I would
Okay.
say, out of those.
Okay, fine.
Okay.
So we've got cash.
Yeah.
We can buy it from cash. That's a simple one.
Yeah.
Then you've got your hire purchase, PCP, P.C.H subscription.
There's one more.
Oh, okay.
There's one more.
All right.
Okay. The other one that's come out more and more recently is something called salary sacrifice.
Ah, okay. Yeah, I've heard of this. Yeah.
All right.
Mm-hmm.
So salary sacrifice is quite interesting because with salary sacrifice, it's a government-led initiative.
Mm-hmm.
Employers sign up to the scheme.
Yeah.
And generally speaking, what they're doing is they're going via lease company to provide their employees with cars that are funded through their salary, pre-tax and pre-national insurance.
Okay.
Okay.
So that money gets taken off their gross income, whatever it would be, right? Before it gets taxed or whatever, right?
So if I give you an example.
Okay. Yeah.
Right. Let's just say as an example, you're earning £3,000 a month.
Okay.
And this won't include things like personal allowances and things.
Sure.
But if you take your tax 20%, say you're a 20% taxpayer.
Yeah.
You know that from £3,000, £600 is going to go to the tax man. Okay.
Yeah.
8% is going to go towards national insurance, which has just changed recently. So you've got that amount of money is just going basically to the tax man. So now, if you're adding that car in now, what you're ending up with is £1,000 that your employer is now going to send from your £3,000 salary off to the lease company for your car. So you're only going to pay tax on the £2,000. So your tax burden drops. Rather than paying 840, you're now going to pay 560. If you look at the two salaries, though, whereas before you would have taken 2160 and then taken £1,000 off for a car, you would have taken 1160 home. You're not anymore. You're taking 1440 home. So the difference between the two salaries is the best way to try and describe it. You're effectively, your salary has dropped by 720, not the 1,000 as you might have expected. Now, for somebody who's actually a 40% taxpayer, when you consider that their savings are even greater, then it makes a lot more sense. So, a £5,000 salary with 40% tax, £1,000 car added in, and actually the difference between the two salaries would only be £520. And when you include tax, insurance, and everything else, all the maintenance costs, it's a bargain, isn't it? It's a really efficient way of doing things. Yeah. So what you end up with is a situation where rather than paying the tax man and the treasury, you're actually now paying a lease company instead. That's the incentive the government have given.
Is it mainly only for electric vehicles and hybrid vehicles?
At the moment, it's electric vehicles and hybrids.
I guess this must be some sort of government promotion.
It's a government promotion for green living, I suppose.
Credentials, etc., etc. Helps the company to meet their green criteria.
It helps the government meet its green criteria as well for cars on the road and pollution and all that kind of stuff. So that's the direction it's going in.
Helps the environment. That's what we meant to say. Yeah. Forget the financial. It helps the environment. Yeah. Okay.
So what you need to do really is to work out whether your employer offers that service or not.
Okay.
And a lot of councils do, large employers like BT and so on. They will all have some kind of scheme that's now available. And my own personal experience from my employer sort of tells me that yes, it's a good thing to do. And I know a lot of my colleagues have just gone for it, basically.
And is this available only through an employer, or can you go through a broker for this as well?
Employers
only,
because it works on your tax. It works basically on salary. So
self-employed, you can't do it, etc.
If you are self-employed, talk to your accountant because there will be ways and means of being able to fund and finance cars.
Right.
That that will save you money.
Yeah.
In the long run.
Okay.
So, any other questions, Dhroov?
I think. I mean, if we come back to the Honda, my own agreement, is it worth going through that? Is that something we can go through
your agreement?
Okay.
Yeah. Right. There's a little picture of you there as well. Look, with your car. That's lovely.
Doesn't he look tiny? Yeah.
Anyway, so basically, from what I've read, what this agreement is telling me is that your cash price for the goods was $33,681.
Yeah, that was the list price as such,
that was
right?
the price that they agreed with you.
I see. Yes, sorry, yeah.
The list price they agreed with you.
Yeah.
And you put in a cash deposit of $4,255, which you kissed goodbye at that point and you're never going to see again.
Yes.
Okay. So that's what you always do with deposits and cars. They're then saying that they're charging you £5,156 in interest for the balance.
Mm-hmm. That's a lot of interest, actually,
That's
isn't it?
a lot of interest, isn't it?
Yeah,
When you see it on paper,
yeah.
it's quite worrying.
Mm-hmm.
Now, I always say to people that if you want to try and work out what the true cost of having a car is, do a simple calculation.
Okay.
That simple calculation is the amount of money you're putting in.
Yes.
Your deposit. Any incentive the dealership is giving you.
Okay.
Towards that purchase.
Like a deposit contribution or something like that?
Yeah.
Okay.
And then add to that your monthly installments that you're going to be paying.
Yeah.
Multiplied by the number of months.
Right.
That tells you how much money, and then you subtract from all that total the purchase price of the car. And that tells you how much extra you'll be paying.
What is your cost of buying this car on finance, effectively?
On finance, yeah.
Yeah, fine.
Obviously, if you've got a guaranteed final value, you can deduct that and so on. So it gives you an idea then as to what the cost of buying that car is going to be.
Now, that's obviously spread over 4 years or 3 years, or whatever your term is, right? Effectively.
Yeah.
I see.
So going back to where we started this, right?
Yeah.
You're buying a car.
Yeah.
It's a depreciating asset.
Yeah.
You're paying interest for the privilege of that depreciating asset as well.
Absolutely.
Right?
Yeah.
Is it such a good idea to buy a new car?
It's a scam, isn't it? Absolutely.
A scandal. It's a
complete
scandal,
scam.
I tell you.
Absolutely. Yeah.
And somebody somewhere is making a lot of money out of you.
Yeah.
So anyway, so looking at your agreement down here, it's quite interesting, right? The interest rate they quote at 5.75%. Per annum.
So that is the APR as we were discussing earlier on, right?
No, the APR is below at 5.9, it says there.
Okay, so it's even higher, right? Okay, 5.9.
So they've got 3 interest calculations, and I can't for the life of me try and work out how on earth they come to those numbers. If I was with you when this car was purchased, I think I'd be asking those questions.
Got you.
Okay.
Interesting, okay.
It then tells you at the bottom, it says one payment of £419, followed by 46 payments of £419. One final payment due after 48 months of $14,869. So that's what you've got to pay at the end. That's your.
It's my balloon payment.
It's your balloon payment, not your guaranteed final value.
It's my balloon payment. Okay.
Because if you go back to Honda again,
yeah,
your guaranteed final value, it says there for Honda Aspirations is $16,475.
So if I was to buy another Honda product,
yes,
when I buy my Jazz next,
they're
gonna guarantee me that the car's worth £16,000.
Yes,
right. But the car's worth more than that.
They're selling for something ridiculously higher than that.
Yeah, £10,000 more. So that positive cash in the middle, that comes back to me again?
You can request it and you can negotiate with them and they should give it to you. Why not? Because if they don't, what do? You go to WeBuyAnyCar.com.
I see.
And you hand the car back to them.
Yeah.
Take the cash, and then actually cash is always king, isn't it? You can decide what you want to do with it.
Or sell it privately or do something else, right?
I see.
I see.
Now, what we'll also do is we'll have a quick look, I think, at the payments, because I think you sent me your statement earlier as well, didn't you?
Mm-hmm.
And on your statement, there's a monthly statement here. No, I mentioned earlier about how interest payments work. You can see there that you're paying £419.43 every month.
Mm-hmm.
On the first month on this statement,
yes,
which was the 16th of the 12th, 2022, capital you paid £309 towards, and your interest was £110. But as you can see, the amount of interest you're paying is reducing month on month over that 12-month period, and the amount of capital you're paying is going up.
So why is that important? Sounds like a very silly question.
The longer you're in this game for, the less interest you're paying and the more you're paying towards
the actual thing that you're buying, right?
Yeah.
I see.
It's a fairer way of doing things.
Yeah. Rather than just paying all your interest up front.
Yeah. If you look at that chart at the bottom there, it's just a pictorial representation of that. I think it's people don't understand how that works, and I think it's quite a critical part of buying a car.
It is interesting, yeah.
Quick shout out to Studio 67 and TJ for all the work that they've been doing, these wonderful facilities, and allowing us to use this amazing place. So thank you, Studio 67.
Absolutely.
Well, thanks, Dhroov. Okay, so, thanks very much, everyone, for tuning in. This is the first of many episodes, I'm sure, for the T-Junction. I'm Jats. I just want to say thank you again to Dhroov. Thanks, Dhroov, for being here.
Thank you very much. Yeah, thanks for having me. It was really, really interesting, very insightful. Can't ask for any more.
Thank you. And if you like this content, please subscribe, follow us on all the usual social media outlets, YouTube and so on. So thank you very much indeed, and see you on the next one. Either the T-Junction or its representatives are registered with the Financial Conduct Authority, PCA, and as such, any information contained in these episodes does not constitute to being financial advice. It is informational and education. It is recommended that you only take financial advice from a qualified person or company.